Yo, welcome back YouTube to Art Capital Options Day Trading Mentorship Class 13. Today we're going to be going over our 0 DTE SPY and QQQ scalp strategy. This is a very important subject, especially for the last class to the beginner series, to be knowledgeable on. You can either make a lot of money or lose a lot of money trading 0-day contracts just because of the volatility that is included with them. But if you can gain this knowledge and know these safety precautions, it will guide you to a better way of trading them. So let's get right into it, Rich. All right, your trading journey, advanced level. You've mastered the foundation. Now it's time to apply everything to 0-day expiration contract index scalping, the fastest and most precise trading. Your complete ARC foundation classes from class 1 to class 12. From class 1 to class 4, we went over the foundation of trading, of the market, and we went over technical analysis like support and resistance, higher highs, higher lows, trends, and consolidation. Class 5 through 9, we went through our ARC system and our indicators. So we went over what guides us in the market and gives us our edge in the market of knowing whether if buyers or sellers are in control and how we can take advantage of the momentum in the market. Classes 2 or 10 to 12, we went over entry, execution, and management. These three are very vital parts to your trading system. If you have a good entry and a bad exit, that will result to a bad trade. So they all go hand in hand. The execution, being able to identify confluences, being able to have a checklist, whether it's mentally or physically, to help you hold trades confidently and maximize your profits. So class 13 is for elite scalping. Apply your complete ARC system to SPY and QQQ for rapid, high probability trades. You want to go into this next one, Rich?
Yeah, so what is zero DTE trading, guys? Zero DTE trading is 0 days to expiration, options that expire the same day that you trade them. They all expire at 4 o'clock. If you're trading SPY and QQQ on Thinkorswim or other brokers, I don't think it's good for Webull or Robinhood. You could trade them up until 4:15. Why 0 DTE? Maximum leverage, small moves equal big gains due to theta decay working for you. We'll go on into this in a second. Quick returns, hold times measured in minutes, not hours or days. So you could really get 100% on a nice 5-minute candle if it's a high volume candle. Clear invalidation setups work fast or they don't. There's no overnight certainty like you have with swing trading. There's no for 0 DT trading, you're not going to be holding them all day. You're going to be holding them for a matter of minutes to maybe 30 minutes max. Very high liquidity behind these contracts. SPY and QQQ have tight spreads and fastest fills. Their spreads are usually $1 spreads, so the bid will be 50, the ask will be 51. Right, so a very tight spread. You could buy market and sell market without worrying about getting killed on the spread. And if you're trading on a trading platform that has those buttons where you could literally click buy market, sell market, you can get into these contracts very fast and get out very fast and click of a button. The risks that you have to respect to the 0 DTEs are the rapid time decay. So time decay accelerates, especially as the day goes on. Every minute there is decay happening in these contracts, technically. Being early equals being wrong, because if you are early to the move and you end up holding through the move, that contract can get decayed every 5-minute candle that goes by. You are getting decayed on the contract, which means the contract is losing value for either staying flat or obviously going down. But even if it's staying flat and staying in between a range, the contract will not move. You need direction to make the most money with contracts, with 0 DT trading. Higher speed. So moves happen fast, which requires focus and quick decisions. So when you're getting into a trade, right, the moment that you see your setup, you have to execute fast, because if you don't, you can miss it within 1 minute, 2 minutes, or a 5-minute candle. If you hesitate for those 2 minutes or 5 minutes that your setup is presenting itself, that could cost you, and you could have to wait longer until your next setup comes, right? So you have to act fast, and if you don't have that speed and that precision with these 0 days, you can get caught off sides and you could lose money, and you have to understand this, right? Your plays should be working as soon as you get in them, and if they're not, in my opinion, you should be getting out. That is the smartest thing to do, because the probability of these trades and these options, they all go to 0. You don't want to get caught in that. Precision required. Small margin for error. Must nail your entries and exits, like I just said. Discipline is essential. Easy to overtrade. Easy to blow up your account with. Easy to make a good day a bad day with 0 days if you don't know proper position sizing and you over risk. You have to stick to your rules very strictly. 0 DTE equals speed and precision. Now, master classes 1 through 12 first, and then add the strategy. You have to understand how the markets work, how price action work, how clear stop losses is, how to set up a trade to where you know clearly where your stop loss is, you know clearly where your targets are, and you know when to take profits, right? And how to let your runners run. Once you start getting into and understanding all the dynamics in trading, that's when, in my opinion, you could start to look at 0 DTE more, right? You're right on your moves fast, and you're wrong quick. So it's easy stop loss, but you have to respect the stop. If you don't respect the stop, you can pay the price, and these contracts can go negative 50, negative 60, negative 70% very fast. Now, if you put $2,000 of risk up, negative 50% in very fast can be very scary, right? Let's say you're trading and you by accident you put too much size on it and you go off sides, right? You get caught on the wrong side. You could very well take a hit on your account very fast in the blink of an eye, literally. It can get a little crazy, right? So you have to understand all of these risks first. You have to understand how to trade first. You have to understand, obviously, overall trading dynamics and how the market works and price action, setups, whatever, right? You have to know all this, so you have to master these classes 1 to 12 first before adding and really getting into 0 DTE trading. Very high risk, very high chance of you losing money if you don't know what you're doing. Let's go on to the next slide here. You want to go on to it, or you want me to go?
Yeah, I'll do it.
All right.
So, why spying for 0 DTE? Spying are the premier vehicles for 0 DTE scalping. What is SPY, guys? SPY tracks the S&P 500. It's the broad market index. So it's going to be the overall market, guys, right? If SPY is going up, that means that most individual stocks are going up in all sectors, right? So, what are the characteristics? More stable movements, balanced sector exposure, and smoother trends. It's more predictable, guys. It's easier for SPY to respect a level and you be able to catch a move off of that after confirmation, right? So, best for cleaner setups and trend following. What is QQQ? QQQ tracks the Nasdaq 100. It's a tech heavy index. What are the characteristics? Higher volatility, tech sector dominance, and bigger intraday ranges. It's best for faster movements and larger swings. Why both are perfect? Volume. Most liquid options in the world, instant fills, and tight spreads. Remember, guys, you want to be able to get in and out of your contracts very fast, right? So those instant fills due to the liquidity is very nice. Also, like I just said, predictable. It respects technical levels consistently, and your ARC's trading system works perfectly for it. Our indicators that we use go based off of previous data, and since these are super liquid stocks and trendy or indexes, they're really good for the way we trade, right? And why else? Because 0 days are available every single day of the week, Monday through Friday, for consistent opportunities. You want to go next here?
So the first step in this is you wait the first 30 minutes. You never trade the open, right? From class 3 and 5, the first 30 minutes equals the most chaos in the market and a lot of traps. Now, what do we mean by traps? Which we mean fake moves, right? We see very high, let's say $2-3 candles, but you have to wait for these candles to close because they could reverse very fast, right? And you can get caught in these traps. So in the first 30 minutes, the market's really trying to trick all the amateur traders and really capitalize on people's stupidity when it comes down to it. And if you are trading the first 30 minutes, you have to be very aggressive with your stop loss. And you have to be okay with knowing that, okay, even if you got stopped out and then the trade goes, let's say at 10 o'clock, 10:30 in your favor, you cannot get upset because you are trading in the first 30 minutes, which we call amateur hour, the very volatile morning session, which sometimes can be very lucrative if we're trading it correctly, but sometimes can be very dangerous if you get caught on the wrong sides. So we really recommend people who are just getting into trading and understanding markets to not trade the first 30 minutes or really not trade the first 15, 20 minutes, right? You want to let a few candles get it out there. And sometimes you'll see us trade the first 30, but everything will have a clear stop. And sometimes we won't even signal it because it'll be so risky. But usually we don't do that. So you want to let the market show its hand. After the first 30 minutes, you start to see trends across the board, right? You start to see the correlations between everything in the market. What's strong, what's weak, what's trending, or what's chopping, or what's downtrending or whatever the case is. You want to see the correlation, you want to see what sectors are strong, and you want to start analyzing everything in that time, right? Your job is to find high volume, to find good, consistent trends, and so on and so forth. So, the opening chaos, whipsaw action, false breakouts in both directions, trap traders, like I was saying. Wide spreads, bid in the ask spreads hurt your entries and exits. In the first 30 minutes, they manipulate the spreads a lot, and you could look at this by looking at some option contracts, and you'll see it. Sometimes these contracts are opening way overvalued, and then by the time 10 o'clock comes, price settles down, the contracts settle down, and you get it at a 60% discount than what you looked at 9:35, right? Emotional trading, overnight news creates irrational moves that you could see in the morning open, and that's why we say you want to wait and identify trend and direction and correlation, stocks that are correlating, sectors that are strong, before you start attacking the market. No clear direction, bulls and bears are fighting. Unclear who wins. We just said you want to wait and see where the real direction is. Post 30-minute clarity. Hello. Direction established. Market shows if it's bullish, bearish, or choppy. Levels are confirmed. Price is trading above VWAP, below VWAP. Price is trading over the clouds or under the clouds, or held a key support or resistance level. If you're looking short or you're looking long, there's multiple scenarios, but you want your levels to be confirmed. Volume settles, normal trading flow, cleaner price action. Every cloud test is a buy in your direction. Let's say the price is trading over the cloud and it comes down to test the cloud on the 10-minute time frame. Every test in a bullish trend is a buy. That's where your entries are. And vice versa for a bearish trend. If you're looking for puts, every cloud test is an entry. There were some people who made very nice money trading these cloud tests today. And I got a few DMs. Someone made 100% in 5 minutes just trading a quick cloud test on 0 DTEs. So, better entries, your ARC system signals become reliable. These are what you're looking for every day. And this becomes what you're essentially hunting for every day. You're hunting for the signals that tell you what to do, right? The 30-minute rule, market opens at 9:30. You start looking for setups at 10 a.m. or later. What to do in the meantime in those first 30 minutes? You look at the heat map. You look at what gapped up, what gapped down, right? You see the reactions on things that gapped up. Are the things that gapped up, are they coming down? Are the things that gapped down, are they getting bought up? And vice versa. You want to see where the strength is. How do you see that? You look at the heat map. You find the stocks. You look at the sectors. You look which stocks are the most green in which sector, and you potentially either play the sector or look for some opportunity within it. I can go on. There's a lot to do in those 30 minutes, guys. Step 2. You want to go for it? Or you want me to go to?
Yeah, I'll do it. So, step 2, wait for SPY QQQ or wait for SPY and QQQ. Correlation equals confirmation. From class 9, when SPY and QQQ agree on a direction relative to VWAP and clouds, that equals the highest probability. If we're playing a game of probability, you want both of the things telling you the same thing, right? Agreeing on the direction, whether it's to the upside or to the downside. So, what to look for? Scroll down here a little, Rich. All right, so bullish correlation. Both SPY and QQQ are above the VWAP. Both SPY and QQQ are above the green clouds. This equals a strong bullish bias, right? When that's the correlation that you're looking for when you're looking for calls. What is a bearish correlation? When both SPY and QQQ are below the VWAP and both SPY and QQQ are below the red clouds. This equals a strong bearish bias. Same kind of deal with the calls, except for puts, right? And then you also have mixed signals. When SPY is above VWAP but QQQ is below, or vice versa. And when SPY stays in the green cloud but Q's is in a red cloud, or vice versa. What does this equal? Wait, there's no clear bias, stay out. You only want to be trading when both stocks are correlating between the VWAP and the clouds, right? Now, why does this matter? You want to scroll down, Rich? Why does this matter? When major indices move together, it signals institutional conviction and follow through. Once again, we're just saying this is a game of probability, and when the overall market or what we use as an indicator for the overall market is telling you the same thing, it's probably in your best interest to be looking for those cloud tests in that direction that the stock is going, right? Or the index is going.
All right, step 3, wait for the pullback to the cloud and VWAP. Never chase, wait for the pullback. If you're chasing a trade, 9 times out of 10, it's going to go against you, right? You have to be realistic. From class 5 and 7, The best entries happen when price retraces into the cloud or VWAP during a trend, right? Bullish pullback setup. So we have the trend confirmed. We have SPY and QQQ trading above the VWAP and the green clouds. Price pulls back, dips back down into the green cloud and towards VWAP. The weight zone, price touching or inside the cloud and at or near VWAP. What does this mean? Price is pulling back in an uptrend is a buying opportunity at support, especially when you are using these clouds. When we are day trading and you're using the clouds, you have to essentially just think about them as a following support, a trailing support under the price. So anytime the price is trading over the cloud and in a bullish trend, anytime that comes down to the cloud, you think of it as a support, and vice versa if you're trading puts and to the downside. Anytime the price trades up to the cloud, you're looking at it for an entry for shorts to buy puts. A bearish pullback setup is the trend is confirmed. SPY and QQQ are trading below VWAP and under the clouds. Price pulls back, bounces up into the red cloud and towards middle VWAP. Prices weight zone, prices touching or inside and at or near the VWAP. What does this mean? It's bouncing in a downtrend and there's a selling opportunity or a put opportunity at the resistance, at the cloud. So anytime the price comes and trades up to the cloud, if we're in a downtrend, you're looking at it for an entry for puts. It's very simple. And your stop loss is right above the cloud. If the candle closes above the cloud and breaks to the upside, then you get out. And vice versa if you are long. If you're trading and you buy calls at the cloud and price has an aggressive move under the cloud and closes, then you get out. Wait for the candle to close. Remember from class 5 and 6, clouds equal dynamic support and resistance. VWAP equals daily fair value. Well, when price tests both together, equals highest probability bounce or rejection zone. All right? This is key. When price tests both of these indicators together, it's a very high probable bounce or rejection zone. So if we're trading up to it and the cloud is lining up with the VWAP, you're looking to take puts against the cloud and the VWAP. And your stop loss is if the price trades and closes over the VWAP and the clouds, right? And vice versa for long. You want to go step 4?
So I'll do it. Step 4, wait for a 10-minute close confirmation. The 10-minute close rule from class 5 and 10. Never enter until you get a 10-minute close, respecting the trend, right? You don't want to get faked out. Sometimes it's nice buying in the wick because you sometimes just get a wick into the cloud if the trend is strong. But for the highest probability and not to get faked out into any trades, waiting for those candle closes in the cloud is crucial. So, what does a bullish 10-minute close look like? What are you watching? Price pulls back to the green cloud and the VWAP. What is the confirmation? The 10-minute closes bouncing off the cloud and VWAP. The candle body stays above the support zone, right? So let's say that you're in a bullish uptrend. You already waited the first 30 minutes and price is coming down to that VWAP and cloud. And VWAP is trading in the middle of the cloud. And you see price come wick down into it, below it, but close right above the VWAP and in the cloud. That is going to be your confirmation. Your entry trigger on the close of that 10-minute candle. Buy calls. Why? This confirms that bulls defended support and the uptrend is going to resume. What does this look like on the bear side? Bearish 10-minute close. What are you watching for? Price bounced into red cloud and VWAP. What is the confirmation? 10-minute candle close, rejecting off the cloud and VWAP. Candle body stays below resistance zone. Entry trigger on the close of that 10-minute candle. Buy puts. Why? Confirms bears defended that resistance and downtrend is going to resume. If this candle closes, what if the candle closes through the VWAP and cloud? If the 10-minute closes completely through that zone, that is not an entry. This is signaling a breakout or a breakdown. Trend may be reversing. Wait for a new setup, right? Let's say trend is starting to reverse and you go into a bearish trend from a bullish one. You can start looking for those bearish 10-minute cloud entries, right? But it's always good to wait after the candle closes.
Step number 5, volume must correlate. Volume confirms the move. From class 2 and 4, volume tells you if the move has conviction or it's just noise, right? You want to see high volume behind whatever you are trading, whether you're trading calls or whether you're trading puts. You want to see that there's good volume behind what you're in. And if there's not, if it's like a slow melt up, low volume melt up, you want to be extra cautious, right? Every trade is different, but these are the signals, these are the things that you need to look at. So for calls, decreasing selling volume. During the pullback into the cloud or the VWAP, you want to see the selling volume bars getting smaller and the red candles with very light or low volume. What this means that sellers are exhausting, the pullback is weak, likely to bounce, and the bulls are still in control. Then you look for increasing buying volume on bounce candles. Green candle with strong volume equals buyer stepping in equals entry. For puts, decreasing buying volume. During the bounce into the VWAP and cloud, you want to see the buying volume bars getting smaller. The green candles with low volume. What does this mean? Buyers are exhausting, bounce is weak, likely to reject, bears are still in control. It's likely to reject and continue moving to the downside. What do you look for? You look for increasing selling volume on a rejection candle and a red candle with strong volume. Sellers stepping in, that is your entry. You want to be looking at the candles. If it's giving you a wick off of a cloud and the VWAP, that is telling you that, let's say you're looking to short something and the price comes up to the cloud and the VWAP and you see it start wicking down immediately off of it, that's telling you that sellers are in control. Sellers are eating up all those buyers right there, and price is likely going to continue down. These candles tell you the story. Volume warning signs. If volume is increasing during the pullback or bounce, it's kind of showing you that there's a strong counter move and it might break through and go break the trend into the opposite way. And you're not going to take an entry if you see this happen. So now if volume is increasing during these pullbacks, if you see a sharp move down and you're looking to buy puts, and when they bounce it back up to the cloud and the VWAP, if you see strong volume on that bounce compared to the previous candles before, you might want to stay away from that trade or not take it. And if you do take a trade like that, you want to be extra careful because you know that maybe all that volume is buyers accumulating. All right, let's go to the next slide. Step 6. Chase has a question. You want to go over Chase's question quick?
What does Chase say? What's your favorite time frame to look for cloud tests on the what do you usually find the most accurate time frame that works for the clouds? I'd say looking at it on the 10-minute is going to give you the best confirmation, the clearest confirmation on a trendy day. But if you're trading on a day where maybe momentum's a little bit slower, or even on the days where there's not really any pullbacks, those 5-minute tests are very nice as well. So definitely that 5-minute and that mainly 10-minute for confirmation, right? What about for volume? Also 10-minute. Let's get right back into it here. So step 6, select 0.20 delta options. The 0.20 delta is the sweet spot from class 3 to and 11. For 0-day expiration scalping, the 0.20 delta gives optimal risk to reward. Why 0.20 delta for 0 DTEs? The advantages are you're going to be paying a cheaper premium, so there is lower risk per contract. Usually the 0.20 delta contracts are priced anywhere from $40 to $70. So it's very small account friendly, especially if you're only buying 1, 2, or 3. Usually at the beginner stage, you should be buying 2 to 3 to be practicing the scaling factor of trading as well. Another advantage is higher percentage gains. These can double or triple very quickly, giving you a 100 to 200 to 300% gain just in the matter of 20-30 minutes. The third advantage is better risk to reward ratio. There's a small risk and a big reward potential. Once again, if you're getting in at those cloud tests at the pivot point where the trend is being tested, you're either going to be right very fast or you're going to be wrong very quickly. And using our risk management and our defined risk, all your winners should be bigger than your losers, right? You're taking a 30% loss or you're taking anywhere from 50 to 150% win. And the last advantage here is multiple contracts. You can scale positions affordably. So you may be asking yourself, why not a higher or lower delta? So for 0.50 delta plus, these contracts are usually in the money or at the money. They're usually too expensive and there's lower percentage gains and there's high risk on 0 DTEs. Even though they are more expensive, that doesn't mean that they move less volatile, right? And for a lower delta, say 0.10 delta, it's too far out the money. There's too much distance to travel and it's low probable for 0-day contracts. Why? Because you're expecting an outrageous or exaggerated move on an index, right? It just doesn't make sense unless there's some sort of news catalyst or something else moving the market. So, how do you find a 0.20 delta? You open up your options chain for the 0-day expiration contract. You look at the delta column, which you could just scroll through when choosing the strikes. Find the strike with the delta around anywhere from 0.18 to 0.23. That's kind of the sweet spot when we're looking at those cloud tests. And select the strike closest to 0.20. Pro tip, in fast markets, the 0.20 delta gives you room to be slightly early without being stopped out, right? These contracts usually move pretty nice near the cloud, even in the chop. If you're just chopping for, let's say, 5-10 minutes, you're going to be fine once it bounces compared to something with a further out delta, which will cook that contract easier. All right, so moving on to the next slide here, Rich.
All right. Step 7, initial trim at VWAP bands. So lock in profits at the VWAP bands. From class 6 and 12, VWAP bands are natural profit targets. Trim there to secure gains. Just like cloud, we use these as support and resistances. If they are above the price, we look at it as a potential local resistance. And if it's under the price, then it's a potential local support. So, for calls, the top band target. Your entry, you bought calls at the cloud or VWAP bounce. Price in lower zone, calls are cheap. Your initial trim is when price reaches the top VWAP band. You sell 50 to 75% of your position, you lock in profits, reduce your risk, and you let your runners run. Why the top band? Statistically, high probability of resistance. Institutions take profits here, algos take profits here. Price often consolidates or pulls back. Guys, you got to realize a lot of things in this market are algorithmic trading. A lot of algorithmic trading uses all of these indicators into their strategy, right? So let's say the price comes up and hits the VWAP. Some of these algos are programmed to automatically sell if that happens. So that's why we say institutions take profit here. Price often consolidates or pulls back from these levels. For puts, the bottom band target entry. You bought puts at the cloud or the VWAP rejection. Price in upper zone, puts were cheap. Initial trim, when price reaches the bottom VWAP band. Sell 50 to 75% of your position, lock in profits, reduce your risk, and let your runners run. Why the bottom band? Just like the top band, statistically higher probability of support. Institutionals buy or cover, sell out. They sell their puts, they sell their short position, and if they sell their short position, they buy it back. So, high probability of support at this area. Price often consolidates or bounces. The trimming strategy is step 1. You scale out, sell majority at first band hit. This is your main profit. Step 2, the runner. Keep 25 or 50% of the position for a potential continuation beyond the band and catching the potential trend. And step 3, risk off. Now trading with house money, can't lose your original capital. So, when you sell that 50%, or 60%, right? You lock a lot of your money in. And then you can let the rest of the contracts work without having to worry about losing any money on the trade, even if it goes completely against you. So step number 8.
Step number 8, holding runners if band breaks. When trend extends from class 12, if price breaks through the band, hold the runners to maximize gains. For calls, the top band break, what happens? Let's say you trimmed that initial 50 to 75% at the top band and you're only holding your runners. Price breaks through and above the top band and you're still holding 25 to 50% of your position. What is your action? You hold if we are in a strong trend, right? The strong trend is extending. This is equaling potential for big gains. Wait for a 10-minute close below back towards the middle VWAP band. This is going to help you guys, especially for the people that struggle with maybe selling at 30% and they sell their whole position and then they miss out on a 200-300% win, right? If you follow this system, you are going to save yourself from a lot of emotions. Why? Because you're trading based off of a system. Just like the algorithm is set to buy or sell at these levels, you should too, right? So, exit signal. I already went over this, right? For the exit signal, or am I tweaking? Let me just do exit signal. When the 10-minute closes, back inside the bands or moving back towards the middle VWAP, you're going to sell the remaining of your runners. So for puts, bottom VWAP band break. What happens? Same situation. You trimmed that initial 50 to 75% at the bottom band from your entry at the middle VWAP and cloud rejection. Price breaks below the bottom band and you're still holding 25 to 50% of your position. What is the action here? You hold your runners. The strong trend is extending. This is equaling potential for big gains. Wait for a 10-minute close back towards the middle VWAP. What's your exit signal? When a 10-minute closes back inside the bands or is moving towards the VWAP, sell the remaining of your runners. Why does this work? Scroll down, Rich. Why does this work? Bands break equals strong momentum. Extreme extension always mean revert to VWAP. This strategy maximizes gains on explosive moves while ensuring you capture the full extension. You want to go next here?
Step number 9. Use stop loss at 50% plus profit. Protect your gains. Guys, when you get into a winning trade, the moment that it starts working, and when I mean really working, over 50-60%. A nice 10-20% is nice, but that's dog shit. Respectfully. It's terrible. When a really good trade is working, we like to say it's over 50-60%. And now once you get into that 50-60% range, you want to just focus on protecting the game, right? Your job after that is playing defense. You want to squeeze that trade for as long as you can. As long as the price is telling you to stay and you want to be in that trade, you want to capture as much gain, as much profit as you can while keeping your risk as low as possible. Now, how do you do that? Is by keeping a stop loss in profit. Now, once your trade starts working, you keep a defined stop at a certain percentage. So, from class 12, once up 50% or more, use a trailing or break-even stops to ensure no loss on the trade. This is going to help you, number one, grow your account. Number two, it'll keep you building good habits that are essential to long-term profitability. Now, if you're learning how to day trade, this is a skill that people do their whole life. My mentor's 70-something years old to this day, still behind the charts, still trading, still love for it. So this is a skill that once you have and once you wire your brain to think in a certain way, it's something that you could bring with you forever and wherever. It's the beautiful part about trading. As long as you got a little bit of Wi-Fi, you'll be still good. So in order to be still good, you gotta protect your gains. So the 50% rule for 0 DTE, especially for 0 DTE, is when your position is up 50% or more, one option, facts, do good Wi-Fi. Shit Wi-Fi can mess you up. Hello. So option one, when you are up 50 or more percent, put your stop at break even. Now this just guarantees that trade is risk-free, so you could let it work for as long as it works until it hits your profit targets or until it stops you out break even or in a very small profit. Set your stop loss at your entry price, so the pro guarantees you don't lose. Con, you might get stopped out at break even and you might not make any money, but you didn't lose any. Still a win. Option two, trailing stop. Now this is break even stop is if you're day trading and you're buying weeklies or next week or something like that. You want to hold it for a good amount of time. You're willing to risk. Trailing stop is mandatory for 0 DTE, especially if you want to actually make money. You set your stop at 25 or 30% in profit once your trade starts working. Now 0 DTEs can work fast, so once you get up 50%, now your stop loss should be 50%. A 0 DTE can go 100% in one 5-minute candle, right? If you catch it at the right time and in the right direction. You want to set your stop loss aggressively in profit, so that regardless if this trade starts to go against you, you're gonna get out and you're gonna get out for a nice profit. If you continue to do this and you make this trailing stop a rule for your 0 DTE trading, you can have absolutely exponential growth, especially in a small account, because every trade is technically going to be a win, and you don't need to trade a lot. 1-2 good trades a day, making 30% can grow your account in 2 to 3 months. Most people aren't patient. They want to get rich by next week. That's not good. It's a terrible mindset, especially when you're trading. So as position gains, you move your stop up to lock in more. Let's say you go to 100%. You want your new stop loss to be at 70%. You give yourself a 30% room window, right? Let's say you go up to 150%. You want to put your stop loss back at 100%. So regardless, if you get stopped out, you locked in 100%. You go up 200, 300%. You want to put your stop loss 50, 60% under where you are. So regardless up, especially when you get up to those high percentages, 300%. Let's say you have a 350% trade. You want to put your stop loss at 280%. So the worst that's going to happen is when you're working in a trade and you get a really good trade, especially for 0 days, you can capture 200%, 300% fast, or potentially in a span of 30 minutes, right? You want to make sure you want to have these good habits in your head. So once you get out, once the position starts working and then stops working, you get out when you need to and you don't hold it back to your entry. If you hold a good trade back to your entry, it becomes a terrible, stupid trade. And then you go into those mental cycles of, oh my God, I should have done it, I need to do it again. And you start forcing stupid trades and you get into that vicious cycle that just is a recipe for disaster, right? So you want to lock in that trailing stop and make it a habit when you are trading 0 DTEs. As position gains, move stop up to lock in more. Locks in profits. The pro of this is it locks in profits while allowing runners to run. And the con is you need to actively manage. So if you're working a 9-to-5 job, it could be a little tough to be doing this. But if you have the time and you are behind the computer or you're behind the iPad or you're sitting in the car for the 30, 40 minutes that you have on break, you can be actively managing this. And you have to. You need the active management because once you see the percent starts going down, you just stop out. Whether you have that limit order set, if you're on Webull or Thinkorswim, you have that limit order set right there. Or if you're on Robinhood, you see that percentage start going from 350% down to 250%. You just want to take it. Even if it goes and runs 400% or whatever, you still locked in 250%. Be grateful. Phenomenal trade. Good trade. Move on to the next. Boom, right? Or come back tomorrow. Grow the account. Aim for growth. Sorry, I'm babbling. Example, right? 0 DTE call trade. Entry. You bought the calls at $1. The price moves. The call is now at $1.50. You're up 50%. You set your trailing stop at $1.25. So you lock in a guaranteed 25% profit. And even if the candle wicks down on you, you still get out at a guaranteed profit of 25%. And if it continues up, the call hits $2, you're up 100%. You move your stop up to $1.60. So you guarantee yourself a 60% gain. Now, if you're up 100% and you trim out 1 or 2, but then you keep the rest with your stop loss for the rest of the position at 160, that's phenomenal management. Even if the price reversed, you lock in solid gains. And this is how you grow, guys. This is how you grow. On 0 DTE, theta decays rapidly. Never let a winner turn into a loser because it can turn into a loser within one 10-minute candle. And don't be that person that just watches their position completely, for lack of better words, fuck you, and lose all your money, right? You watch 100% go back to negative 5%, and then you take a loss. You just had 100%. Why didn't you trim out when you were supposed to? And why didn't you have a stop loss and profit? It's on you. You're the one who's pulling the trigger. You're the one who has the account in front of them. You're the one who needs to make these habits. So going on to the next slide here.
Critical rule, never fight the trend. The fastest way to lose is fighting the trend on a 0 DTE. This equals instant account damage and bad habit forming. If you form this bad habit to always go against the trend, let's say you miss the calls, right? And SPY and QQ are in an uptrend and SPY is trading above that top VWAP band, holding with momentum, and you see that first break, and your first thought is, oh, let me buy puts while we're in a bullish uptrend, at least down to the cloud. This is a very bad habit because if we're super strong, we may break below down for one candle, but if the selling pressure isn't strong, it'll just go right back above that top VWAP band, right? So this is just a super bad habit and just a way to lose money in the market. You might as well just sell me. Don't do this. Scenario, SPY and QQQ are both above the VWAP and the green clouds. We're in a clear bullish trend. Bad decision. Prices extended. I'll buy puts for the pullback. This is literally what I just said. Wow. Result. Trend continues higher. Puts expire worthless. Loss 100% of premium. Do this instead. Scenario. SPY and QQQ are both trading above the green clouds and the VWAP. There's clear bullish trend established. The good decision is telling yourself, trend is bullish. I'll wait for the pullback to the cloud or VWAP and buy calls, right? This is going to help you guys get the patience that you need to be able to wait for those ideal entries where the premium is priced correctly, where the risk to reward is right, where the probability is in your favor, right? Why are you going to go for the stupid shitty trade when you could go for the nice high probable one, right? So, result, trade with the trend, momentum carries position, win 100 to or 50 to 100% gain plus. The golden rule, scroll down, Rich. The golden rule, bullish bias, only buy calls on pullbacks. Bearish bias, only buy puts on bounces. The trend is your friend until it ends. Hello. Eminem and Dr. Seuss collab.
Little Eminem Dr. Seuss. Another critical rule: only buy after the 10-minute close. Timing is everything. Prices touching the cloud does not equal the time to enter. Wait for the 10-minute close confirmation. Too early can equal a disaster if you have the wrong entry. An impatient entry is if the price dips and touches the green cloud, it's at the cloud, time to buy calls. Buy immediately on the wick. What happens? Price continues falling through the cloud. Cloud wasn't strong enough to support. No 10-minute confirmation yet. Results in immediate loss, theta decay, eating at your position, stop out, or expire worthless if dumbass hold. Hello. Never want to hold them until they expire worthless, because every 0 DT will go to what, guys? Will go to what? Will go to what? What will the 0 DTs go to at 4 o'clock? Zero, man. Nobody's active in the chat, man. Come on, man. Patient entry equals the most success, the most high probability. Price dips and touches green cloud. I'll wait for 10-minute candle to close. Watch the candle formation. The confirmation appears. The 10-minute candle closes with the body above the cloud. Wick tested the cloud but held as a support. Green candle with volume equals bounce confirmed, right? What does this result in? A high probability entry. The stock moved up, right? Had a very nice move up, came down, tested the cloud, made a nice little flag, and then continued up, and you bought calls and you made a fuck ton of money. Hello, right? Cloud confirmed as support, immediate momentum back into your favor off of the cloud. A plus setup. Why 10-minute matters close? Why 10-minute closes matter? Hello. A candle close equals commitment. A wick touch is just a test. Wait for the close. It filters out false signals and confirms real support and resistance. You want me to go? You got to this slide.
My bad. Critical rule, avoid choppy markets. This strategy needs trends. Zero DTE scalping works best on trendy days. Choppy markets will destroy you. You guys seen today. Today was just back and forth, and that's a scalper's paradise if you have years of experience in the market and you're using the book map and you have a whole bunch of, you understand order flow and everything. But for an everyday person, for a beginner, trendy or choppy days, especially when it's not even in the range, when it's just low volume, will destroy you. So, trendy day signals, clear direction, spying QQQ consistently above or below the VWAP. There's no ping-ponging across the VWAPs every 10 minutes, right? Cloud correlation, both staying in the same color cloud, green or red, not flipping colors back and forth. Pullbacks respects levels. Pullback bounces at cloud and VWAP, not breaking through them every time. What is the action? Trade aggressively. Conditions are perfect. You want to go hard when the market is easy, and when the market is hard, you want to go easy. Hello. All right, so choppy day signals. No clear direction. SPY is above VWAP, but QQQ is below, or vice versa. Consistent crossing back and forth over VWAP or below VWAP. Cloud confusion. Cloud is changing colors every 30 minutes. Price is whipsawing through the clouds. And failed setups. Cloud bounces fail immediately. VWAP rejections don't hold. What is the action? Stay out and save capital for better days. You have to remember that defense is always a position, guys. Sometimes staying cash is the best decision, especially on these choppy days. So, the professional approach. Not every day is a trading day. Your edge comes from selecting the right conditions. It's better to sit out and preserve capital than to force trades in bad conditions. Facts.
So these complete 0D strategy checklist. Hello, complete trading checklist. For follow every step. If you skip one, it just creates a lower probability. Hello. All right. So step one: wait for 30 minutes. No trades before 10 a.m. In the first 30 minutes, guys, what is your job? What are you trying to do? Demon. Watch. Not even just watch. What are you trying to do? Heat map watching. What else? All right, scan. There we go. What else? Dimmer.
And
Wait for a trend. Understand buyers and sellers, right? The real answer is waiting and identifying for the trend. So all you guys got it right, of course. But if you want to be specific, you're identifying trends. You're identifying strength and you're identifying weakness, right? Looking at which stocks are the strongest, and if there's more weaker than strong, you want to look for short opportunities. If there's no directional stocks and everything's chopping between ranges, this is how you sit out, and this is when you see there's not much going on. You want to overall just look at what's going on, what's moving in the market. Is it going to be a bad day to trade SPY and QQQ? Is it going to be choppy? Are we going to hold between these two levels like we did today? Right? You're looking for a lot in those first 30 minutes. So it's easy not to rush because you start scanning. You're looking at option contract. Is one side more have a higher premium than the other, or so on and so forth? You're looking at things that you're just analyzing and you're trying to find data to go off of, right? That's what you're doing in the first 30 minutes. Sounds like a lot, but it just becomes second nature. Step 2, SPY and QQ correlation. Both you distinguish if they're trading both above or below the VWAP clouds, and by that time, by 10 o'clock, you should see some sort of trend. Step number 3, you wait for a pullback into the cloud or the VWAP zone. Step number 4 is a 10-minute 10-minute close confirmation, candle respecting trend. Step 5 is volume correlation, right? Decreasing counter volume and increasing volume into the trend. Step number 6 is you're looking at the premium. Like we said, you're looking at the options chain. You're finding those 0.20, 0.25, 0.30 deltas. And, right, you're looking for those options. You're looking for the strike to buy. And you're looking for the optimal risk to reward. Step number 7 is when you're in the trade, your initial trim is at the VWAP band. 50 to 70% of the position, take it off at the upper VWAP or the lower VWAP band, whichever comes first. Step number 8, hold runners. If the band breaks, wait for reversion. Hold those runners. If the cloud breaks, you get out. If the cloud is being respected all day, you hold those runners, especially if you're in the money, right? If your trade is really working and you catch a very nice and aggressive trend in your favor, you want to hold and squeeze all of it out until you spot that exhaustion. Step number 9, first of all, how do you spot that exhaustion? The next round of classes will start to go over that. Hello. Step number 9, stop loss at a 50% plus in profit. So once your trade starts to work in 60, 70% up, you want to see your stop loss had a 40% gain, 50% gain. This guarantees you lock in a little bit of paper, lock in a little bit of money, right? These are the critical rules. You never fight the trend and you avoid choppy days, guys. Now, it's harder to say, it's easier to say than do, but after a while, you will start to identify when these are good trading conditions or when these are dog shit trading conditions. Excuse my language, but there is no other way of saying that. There's account killing days where you just need to do nothing or find the individual names that are running and play those. Play the next week contracts. Play something that's not going to expire worthless or decay to nothing into the chop, right? Oh my God. All right, that is the checklist, guys. Bringing it all together. You want to go over the slide together because this is the last slide of the last class
oh,
in the beginner free classes in the boot camp. Hello.
we'll just ping pong the tiles.
Hello.
All right, bet. So bringing it all together, the complete arc system applied to 0 DTE. This strategy is a culmination of everything you've learned in classes 1 through 12. How every class connects. From class 1 to 3, you built the foundation. We went over option basics, weekly scalping, 0 DTE concepts, and 0.20 delta selection.
Class number 2 and 4, we went over technical analysis. We went over price action, volume analysis, and identifying support and resistance, right?
For class 5, we went over the arc clouds, waiting
Okay.
for the pullbacks into the cloud, 10-minute close confirmation for entry.
Class number 6 is the VWAP, VWizzle. Hello. The VWAP bands for the daily tells us the daily bias. If profit targets at the bands, entry zones at VWAP, right?
Class 7, we went over combining both of these key indicators, the clouds and the VWAP for confluence on the highest probability setups, and being able to identify the entry on those.
Class 9 stocks are stocks to monitor, so you're looking for the SPY and Q correlation. and market direction confirmation, right? So you're looking for overall, we're scanning the market, looking at the heat map, finding what sectors are strong, finding where the buyers are, finding what's getting sold off the most, right? Identifying which index is stronger, what individual stocks are strong or weak, and so on and so forth.
And in class 10 and 11, we went over entry and execution. We went over waiting the first 30 minutes, entry confirmations, timing entries perfectly.
Class number 12 was a very important class. It was yesterday, trade management, trimming at targets, holding runners. How do you hold runners? Yesterday was a phenomenal class. Nail on the head, hit a lot of key points that a lot of people are struggling with right now. And it was very informative, right? Trimming at how to hold your runners, how to keep your stop losses in profit, and how to properly scale out so you can actually scale your account. So, you now have the complete system. Every piece of the puzzle fits together. You need to understand all of these classes in order to become, in my opinion, in order to be a better and a smarter trader. It's going to help your edge. Practice the strategy, respect the rules, and execute with discipline is the key thing here. You have to respect the stops. You have to take your shots when the market is telling you to. Don't let these good setups go away from you. Don't get scared when they approach you, right? A lot of people, when these very nice setups come in front of their face, they don't execute upon them. And then the stock ends up running in their favor, and the contracts end up going 100, 200%. How many people has that happened to? It happens to me sometimes. I know if it happens to me sometimes, I know it happens to other people, especially the beginner traders who aren't the most confident yet, right? So all of these classes, guys, will be posted on YouTube. We're editing all of them right now as we're speaking. We have a lot of them in the pipeline, right? What do we have? Class 5 or class 6 uploaded? We have to upload the
We
rest.
got class. We got to get class 6, 7, 8, 9, 10, 11, 12, and 13 uploaded this week.
God damn! We
Hello.
got a lot of editing to do, man. We got a lot of editing to do, but all of these classes will be on YouTube by what? Let's give it a go. By the weekend?
What day is it today? Damn. Thursday? Oh man, I'm not gonna be home till Friday night.
All
Damn.
right, they'll be up by next weekend. Hello, how about that? They'll be up by next. We'll be up by next weekend. All 40 or 38 of you who are in the audience right now who listen to this, you guys got the free sauce ahead of everybody. Hello, you guys got
Yeah.
the real game. I hope everybody was writing notes down. I hope everybody understood, and I hope this was a good reminder for the more experienced traders. And I hope this was a valuable lesson for all the newer novice traders. Hello. Guys, we are here to help you. We are here to progress with you. We trade together, obviously, but we don't want you guys to just rely off of me and Angel. We want you guys to think the way that we think, to look at the market the way that we look at, because you become an asset at that point. You stop becoming such a leech. Nah, I'm just kidding. You stop becoming a novice that's just following blindly, and you start becoming an actual independent trader who can manage good money, who could print, who could bring the skill wherever they are. As long as they got good Wi-Fi, they can make a little bag, right? But you have to do and watch all of these classes. You have to understand all of these classes. Watching it is one thing, but understanding it is everything. Now, it's going to take
And
a little bit.
applying it is really the sauce because understanding it, you can understand it, but if you're not applying it,
But
if
guess
you're
what?
still
How easy is it to apply it when you're trading with us? It's so
where
easy
to?
because we're all looking for the same things, right? So, guys, this is 7 years of me doing research and going in and losing money, making money, and trading and really diving in the market, really making it, understanding it, making my own system, right? Growing my accounts, making bad trades, learning, and really defining and renewing or revitalizing the system over and making it as perfect as it can be, but always adapting, right? I'll add you back right now. But guys, as I was saying, guys, all of these classes, they might take a little bit. You might have to rewatch them a few times, and that's okay. This is a lot to look at and apply. But when you have a solid team around you, it makes it so much easier to apply because, like I said, we are all looking for the same things day in and day out. That's all I really have to say. Angel, do you want to say any other words? Anything else?
Yeah, let's end it with a little prayer for the last class. Just put it on the first slide. You see that little bottom dot all the way? Yeah, facts. All right, bet. Let me get right into it then. Dear Heavenly Father, I'd just like to thank you so much, Lord, for all the 40 individuals that are sitting in this call and that are going to listen to this video. I just ask you to continue to guide them through their trading journey, give them the consistency, the discipline, and the patience that they need to become profitable, Lord. I hope that all the information that we've given them goes and they bear good fruit off of it. So in Jesus' name I pray. Amen.
Amen,
Hello.
brother. Amen. Amen.
Let's get it, guys. That was the last of the beginner classes. The series is done and will all be uploaded to YouTube by next weekend, guys. We will be starting the